Welcome back to Markets Today. It was a slightly disappointing day on the markets today. They rose about 0.5% higher. At one point in time, the Sensex and the Nifty were 1% higher thanks to the dovish statement from the US Fed, but ended the day 0.5% lower. The Sensex in the bargain losing about 500 points intraday and the Nifty losing 150 intraday. The blow came largely from the banking sector, though not only from that sector. Let's get you some technical perspective on that note. As always, Sudarshan Sokhani is joining us in. Sudarshan, read the markets for us. Such a dramatic U-turn today.
Good evening. Well, it was for the bulls at least, it was a horrible day in the markets. The markets opened gap up, and then for the third consecutive time in this month, a gap up led to a final big crash intraday, and the markets opened with closed with big losses. This is not the first time it's happening. There's a pattern here. All rallies are being sold into, all gaps are being sold into, and I think our view has been that we were in a downtrend. Then yesterday we said the trading range is now visible and evident, and today the Nifty has come down to the bottom of its trading range. 8600 is the last and final support for the Nifty. If this support breaks, we should be again initiating short positions. Our stop will be 8750. And the chances are that we are now entering a sustained downtrend where much lower levels are coming. There will be a lot of volatility, so anyone who's taking a short position must accept that the markets can go against him or her for even 200 or 300 points, and you can't do anything about it. So take short positions with care, but the direction seems to be clear now.
All right, Sudarshan, what about individual stocks? What ideas, what are you betting on?
A lot of PSU banks are now giving selling opportunities. So for tomorrow, we suggest going short in Orient Bank. Oriental Bank had a trading range which lasted almost 1.5 months, and today that range has broken decisively on the downside. That's a bit disappointing, but that's the market for you. Look for lower levels. It's not just a day trade, it's also an intermediate term trade. Short selling should be done only by professional traders. Take care and be careful.
Okay, all right, Sudarshan, many thanks for that. Well, on that note, let's now go across to Gaurav Bisa of LKP Securities for some trading ideas.
The Nifty has closed near the lower end of the trading range. It has been falling last few days, and I expect the index to respect the levels of 86, 86.20 from where it has seen bounce back on a couple of occasions. Thus, I have two buy recommendations today. The first one being buy on Glenmark Pharma futures. It has witnessed a decent amount of short covering today. Also, the activity was slightly raised. 860 strike call option had witnessed increased amount of action. So I expect the stock to test levels of 880 and above. Thus, one can go long in the futures for target price of 880 with the stop loss is placed at 840. The second recommendation today is buy on Motherson Sumi. The stock has been witnessing some amount of long positions getting built into the system on a consistent basis, so they were not very significant. On the other hand, 500 strike call option has one of the highest option concentration. The stock is just moving around these levels, and I feel that once this level is crossed, it can test levels of 525, 530 in a short span of time. Thus, I recommend going long in Motherson Sumi futures for target price of 525, keeping the stop loss at 485.
Right, so that was some technical first and then some F&O advice, but here's a little bit for the long-term investor. What are the factors that the long-term investor should look out for while selecting a stock for investment? Basant Maheshwari, the author of The Thoughtful Investor and undoubtedly one of the better investors in India, speaks to us about his investment philosophy, listening to some nuggets.
First, the retail investor has to get interested in things which he knows. If you're working in a software company and you're buying shares of a power generating unit, or if you're working in a pharmaceutical company and you're buying shares of a consumer company or something else, that's a problem first. If you're working, that's what they call the domain expertise. So you got to buy things that you understand. That's very basic. Secondly, when it comes down to looking at a stock, I think primarily a very simple yardstick would be to buy sector leaders of every sector. It's very hard to lose money there. A retail investor who doesn't have expertise to actually analyze balance sheets to that extent should go by yield. At least he should buy stocks that are giving him a 1% yield or 1.5% yield. you will make money buying a cheap stock only if there is a catalyst which can make the cheap stock expensive. See, investor can never be the catalyst. The catalyst in an investment will always be the business dynamics. So if crude has come down, everybody benefits, all airlines will do well. But beyond the point, it's very difficult to actually find out a catalyst why these companies will do well.
Now, those were some nuggets, but do remember to catch the entire conversation on Money, Money, Money this weekend. And with that, we'll wrap up this edition of Markets Today. But before we go, let's talk about the World Cup. India has sealed its spot in the semi-finals, making its 11th win in a row and defeating Bangladesh, of course, by 109 runs. Let's savor the moment.
Absolutely. Makes the market fall a little less painful, Lata.